Hello and welcome to this Edison audio interview with Ollie Beckett, the manager of TR European Growth Trust. Now, TR European Growth Trust is a European small cap investment trust with a broad, diversified portfolio covering many areas and a very strong long-term performance record. Good morning, Ollie.
Good morning.
So, given this very strong long-term performance record and in fact very strong recent performance, is this still a good time to invest in European small caps?
Look, let's be open and honest. Look, things have moved a long way in the last year, so I wouldn't like to promise the returns that we've seen in the last year. I think Europe still looks relatively attractive. You know, it's got a catch-up play in terms of it was a bit slow on its COVID rollout, and therefore it will be catching up with the US and the UK. You've always got to remember that European smaller companies is geared to global growth, and currently we are seeing, you know, quite substantial global growth. And also, I think the economy will benefit from a rebound in sort of private sector spending. The banks, unlike sort of 10 years or so ago, are in pretty good shape. And on top of that, we have some fiscal support. So there are many good reasons, I think, to be relatively positive on Europe. But yeah, look, let's face it, valuations, particularly in some of the growth spaces and some of the US equity markets, are pretty punchy, and it'll be difficult to totally disconnect from that. So I think Europe's relatively attractive, but I don't want to promise another sort of 50% upside from here in the next 6 months.
Okay, great, thank you. Yes, that would be punchy. So what is it that European small caps offer that larger companies in Europe don't?
One thing is growth. You know, just by definition, almost, these are sort of smaller companies, niches, earlier in their sort of life cycle, and they're delivering far greater, you know, top line growth, earnings growth, and even sort of cash flow growth. And you can get exposure to some sort of purer niches, you know, whether that is, you know, purer ways of playing the transition towards electric vehicles, or purer ways of playing the sort of energy transition that we're seeing towards electricity, away from fossil fuels, you know, through companies like Nexans, French cable companies. So it's getting those attractive niche leaders. And then let's cut to the chase. I mean, over time, smaller companies, whether that be Europe, UK, or elsewhere, have historically outperformed their larger counterparts. You tend to get much higher share price returns.
Okay, great, thanks. So over the last sort of 6 months or so, we've seen globally quite a big market rotation towards more value in cyclical areas rather than, you know, the kind of high growth tech stocks that dominated in the middle of 2020. What has this rotation meant for TR European's portfolio and for its performance?
Well, we've been uncomfortable, you know, I guess for a couple of years now, about the extreme valuations people are willing to pay for some sort of top line growth. Now, this is all being justified by low interest rates, low inflation, and therefore using ever lower discount rates to try and justify those sort of far out cash flows. Now, clearly the catalyst for a transition towards more value orientated companies has come from, you know, the Pfizer vaccine announcement sort of in autumn last year, Biden winning the US presidential election, the whole fiscal packages being put in place by governments. So we were in the right place at the right time, if you like, for that transition, because we've been selling out of companies where we were uncomfortable with the valuations. And we still are of that view. We are of the view that, you know, valuation matters. It will matter going forward. We're not of the view that interest rates have to stay low forevermore. We're not of the view that inflation has disappeared forevermore. But, you know, we'll look for growth companies, and we have a number within the portfolio, but it's all about, you know, paying the right price. We're trying to buy undervalued companies ultimately.
Okay, so you mentioned inflation there, and, you know, not expecting it to go away forever. I mean, in fact, there's been a lot of focus in the markets over the recent weeks about the threat of rising inflation. I mean, partly obviously due to the low base effects from comparisons with last year when inflation collapsed. But are you worried about rising inflation, and what effect would this have on your portfolio?
Worried would probably be a strong word. The consensus is that this is a sort of transitory thing, and that, you know, as you say, we're coming from a low base after the pandemic, and that inflation will disappear. I'm not certain about that either way. I don't want to make a bet that inflation will, you know, this is transitory and will quickly disappear as quick as it appeared. So this goes back to valuation. You know, we want to pay the right valuations for companies, and I think relative to maybe some of our peers, though, we're well placed because, you know, we are overweight financials, which is pretty unusual for a smaller companies fund. We need to ensure, though, clearly the risk with inflation is that, you know, that there are costs in the supply chain. We're seeing it everywhere. It's not just semiconductors. We're seeing wage pressure in certain markets, more a UK phenomenon than maybe continental Europe. But we have to make sure that the companies we own don't come under margin pressure. They may be delivering top line, but they've also got to sort of deliver that leverage through the P&L. So we've got to be wary of it. I'm not particularly worried by it. I actually think relatively we're quite well placed if there is sort of a bit of inflation. Clearly, if it runs away to sort of high single digits, then it's no good for anyone. But where we are now, I think we're pretty comfortable.
Lovely, thank you. Now, earlier on, you touched on energy transition and electric vehicles and so forth. Now, there's been a lot of investor focus on these areas, on the environment and on sustainability. To what extent is TR European growth exposed to those trends?
Well, we really are. But, I mean, some of this is not through some sort of us taking a moral high ground. Let's be honest here. I mean, look, Europe is the leader in a lot of these things around the environment. I mean, it's very much leading the rest of the world. And then if you then go down to smaller companies, well, that's where you find the niches. You know, you can find the sort of recycling companies, the Renewies of this world operating out of Holland, or the new renewable utilities. So almost by default, European smaller companies is the place to be for ESG investing. It's not an excuse to overpay. It's not an excuse to, you know, get all excited about themes, you know, whether that be hydrogen or other themes, which are going to come to transition ultimately, but it's not an excuse for overpaying for companies. We will engage with companies. We do engage with companies to try and help them get their, if you like, their ESG message across, because a lot of the smaller companies haven't been as good at getting that message across as maybe some of their larger counterparts. So actually, in terms of what they're doing, you know, in regards to things like energy transition, they're probably, you know, making a bigger contribution relative to some of their larger peers who, you know, are sort of burdened by history. So I think we're incredibly well placed for that theme, but partly just because we're trying to buy, you know, the growth companies tomorrow at a reasonable price, and a lot of those will be in that European small cap space.
Great, thank you. So just to finish up then, clearly there's a lot going on in the market and a lot of powerful trends and themes and individual companies doing exciting things. But what's the one thing that excites you most as a European small cap investor at the moment?
Excitement could be a strong word, we're referring to myself, but anyway. I'd say more, look, I'm genuinely quite excited that valuation is starting to matter, because I've got a little bit bored of people telling me that, oh, this company's total addressable market is this, and they're going to take over the world, and they're the next Amazon, blah, blah, blah. I think it's much more So the fact that we're going back and looking at the asset values of companies, sure, some of we're now taking into account intangible assets, but as we move to a sort of online world, but you know, that shift back to, if you like, for me, a reality check. Well, that's sort of, I find it reassuring after sort of what I would say has been a short-term period of madness, when with the valuations that people are willing to pay. So that, look, that's interesting. With that whole energy transition is pretty exciting. You know, that move to electric vehicles, yeah, there's a lot of things out there to be excited about, and that people are maybe caring more about the environment. They are caring more about governance. It's not just about, you know, management teams lining their pockets. So I think that's a pretty good thing for society. That's a pretty good message. And, you know, Europe is leading the way. I mean, it's had some issues, COVID vaccine rollout, etc. But I think there's a number of reasons to be pretty excited about the European smaller company space.
Well, thank you very much, Ollie. Ollie Beckett, the manager of TR European Growth Trust. You've been listening to this Edison audio interview. I've been Sarah Godfrey, a director in the investment companies team at Edison. Thanks very much.
Thank you.